Hey, everybody, welcome back to another beautiful day in the real estate world. We've been gone for a little bit of time. We had to get some restructuring done. We had to get some new stuff figured out, but we are going to start going over the charts this morning. It's been a couple weeks since we sat down, so we're just going to revisit some old stuff as we kind of get back into the swing of things, and we're going to kind of talk about where things are at and what to expect over the next few months. First but not least, let's just jump into SpaceX. SpaceX is one that we talked about a long time ago. Not a long time ago. Shoot, it was a month ago when it came out. Well, geez, month and a half already. Wow, time's flying. Anyways, so those of you that were with us at that point, remember when we talked about when it launched, everybody was buying, 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 buying. There was a significant amount of retail purchases on the market. But just like most and almost all IPOs, you're going to find that most investors buy in on the hype, which is typically what you see. Just people get excited about something, and just because there's a name behind it like Elon Musk or Steve Jobs or whatever the case might be, you're going to see a lot more people that are going to jump in anticipating a major run up. But what happens 90% of the time is you see a 50% correction down into a low, and then when that happens you start to form a bottom. Here we are at 48% down from all-time highs, or relatively what closed at all-time highs. I guess we had a little push up farther than that if we were to go to the top of the candlestick. Let's see here. Top of the candlestick, now we're down 52%. So, I mean, hypothetically, we're doing exactly what always happens in the stock market, or I shouldn't say always, but typically happens, right? Companies like this are always going to come out hot out of the gate, and then you have to take some time for them to structure and start building value behind the name. So just because a company IPOs doesn't necessarily mean that it's going to be worth what it comes out or what it IPOs at, right? This IPO'd at over $1 trillion. And I mean, for a lot of us, we get excited. We think, "Oh, that's awesome! That means that there's money here. There's something happening." But really, what happens is that you start to see companies come out with this valuation, but there's no credibility behind the valuation. So, I mean, something like this is a pretty easy call. I mean, most of you kind of understand that. But before we jump too far into things, let's talk about the real estate market. The real estate market has started to take a major slowdown, if you will. I mean, it's still busy for us. We're still selling houses. I think last month I only sold like 2 or 3, but the month before I think we sold like 7 or 8. So I mean, typically in July you're going to see the market kind of slow down. But what's really driving this right now? What's really giving us this structure in the market? Well, first off, I mean, we have a lot of uncertainty. The Strait of Hormuz and the war in Iran has continued to go up and down. We've seen waves, once up and down, up and down, and energy prices are really going to be the big driving factor behind that. But here's why I'm being optimistic right now, because there is one thing, well, a couple of things, but there is something that actually is giving me a little bit more optimism, and that's going to be WTI, or I'm sorry, this is Brent crude oil and WTI oil. The reason is because there's a couple of things on the charts that really make a lot of sense to me. And for those of you that are somewhat traders or know a little bit about the trading world, pay attention to this, right? So typically what you see in markets is you see a massive run up, right? It reaches its all-time highs, then it reaches a lower high. Then you see a major correction, find support, a major support, and then it comes back up and finds a major resistance again with a lower high. So from a technical perspective, typically you're going to see things continue to go down from here. It could very well bounce and see new all-time highs, but more than likely you're going to see a major wave come into the market like this, and then it's going to fall off. People are going to sell, and then you're going to have a few of those traders that buy at that major support and see a nice bounce. Now, remember, it was a couple weeks ago, but we did talk about this right about here. We were talking about how the market was starting to feel oversold, and it felt like we were going to see a nice bump in the markets, right? So this right here is played out almost perfectly. The support and resistance zones are a little bit arbitrary as of right now, but I mean, you can really show that the major support or major resistance is 1, 2, 3 sets of big volume from a support and a support again, right? So this right here is a major recent timeline support / resistance, and it turned into a major resistance point, and then we saw ourselves go down. Now, same thing happened with WTI, right? Right here. Ooh, right there. Okay, our lines might be slightly off, right? But they don't always hit exactly. But you can anticipate, right? You can anticipate, and that's what we did. We anticipated, right? High, high, lower high, lower high, lower high, and now a lower high. Again, that just means that the market itself is starting to slow down. If you notice on SpaceX, you saw the major volume decrease over time, right? And typically what happens when you see traders see stuff like this, the volume starts to fall down like this, you start to see a little bit of something like this, right? Just a little consolidation. Oopsies, I did not click on that. a little consolidation, right? Chun, 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 chun. And then it either makes its break down or up, depending on how the market really sits at that point, right? So for right now, I would say if you're going to start buying into SpaceX, now's not a terrible time to start dollar cost averaging, depending on what your structure is, what your trading strategy is. It really just depends. But what I'm getting at is the market has slowed down pretty significantly. And why? Because we have a lot of concerns about inflation continuing to rise in the energy sector. We have a lot of conversations around AI and how companies have invested billions but still are losing money. Google came out and for the first time in a very long time, they actually showed a loss on their quarterly earnings, which was pretty significant because they've invested so much money into AI. So right now, on top of that, you have the war in Iran, which we talked about. It sounds like we're getting closer to the end of it. I mean, we've said that for months and weeks now at this point, it feels like, but we're starting to see traction and progression. Whether the war completely isolates and stops is kind of irrelevant right now. The market's reacting based off of its anticipation. So the anticipation is that we're going to see some credibility sooner rather than later, and the market's going to start to bottom. Now, from one thing I did see this morning as well is I noticed on the S&P we're starting to find that we broke out of this channel, right? We saw all-time highs in the S&P, but again, we saw those lower highs. It tried to break above it, but we kind of found that same one, and now we're starting to hold a bit of a resistance underneath this trend line. Now, if you guys remember, this channel that we have in here goes all the way back to the bottom of 2007. So we've seen only twice now where it's broken above that channel. We had the COVID kind of peak of the bull market, and now we're starting to see another kind of peak, if you will, right? And I mean, the only thing that's really going to save this at this point is that if the war in Iran officially ends, then you're going to see a lot more money coming into the stock market. But for the time being, you're going to see the market be a little bit, and I realize I didn't even put this up, so we're going to start over for one quick second. But this channel on the S&P 500, it's a daily chart, goes all the way back to 2007. There's only been twice we've seen a break above this trend line or above this channel, right? And just because it breaks above the channel doesn't mean it's going to new all-time highs. In fact, most people, if they were smart, they would have sold a little bit up here. Some people didn't, some people did. The S&P 500 really isn't trading unless you're trading the call and put options, but this does right here kind of show me that we more than likely are going to see a downward pressure on the market before we see an upside. And a lot of people aren't really ready for that. Now, to finally wrap it up, we have also seen on the 10-year Treasury where we're starting to see a bearish channel. All right, we're starting to see a bear channel or a bear flag, if you will. More than likely, again, we have to. What's really fascinating about this stuff is that it actually the way that the news work follows trends in the charts. So it's not always, but it's a good probability depending on what you're trading, right? So for oil, for example, right, we saw that the technicals showed that it was oversold and it was finding a bottom. And I'm not even joking you, like a day or two later, strikes happen in Iran and oil goes right back up, because that's how markets work, right? They're cyclical. They're very pattern based. I mean, there's a term, millionaires use technical analysis and billionaires use astrology, or millionaires use charts, billionaires use astrology. I mean, for traders like myself, I guess we focus on the next 2-3 weeks, 3 months, 3 years. We use certain patterns, right? Just like the market uses certain patterns. When we find a pattern that makes sense, that helps us make our calls, gives us a better probability, that's where we start to focus on, and that's how we hyper focus and get better at trading, right? But what we're seeing is I'm starting to see, again, we did see a higher high with the 10-year Treasury bond, but the bear flag is showing. And again, all it really takes, and we saw this we'll jump into in just a second, but all it takes is really an actual ceasefire, end of the war, and the markets could run aggressively. Those of you that were paying attention to Kevin Warsh, he was talking more, I don't know how much off the cuff, I don't remember the whole thing, but he was pretty hawkish. I mean, some people are going to say the vice versa, but he was saying that we have to get inflation under control before we can make moves. And now people are anticipating that we're going to see a rate hike over the next, I believe October is when we have the next FOMC meeting, versus the rate cuts, which everybody's really hoping for, right? Part of that, is that goes back to the bonds, where the bonds are continuing to go higher, interest rates are going higher, and less people are buying homes. I mean, July is naturally a slower month in North Dakota. Everybody only gets a little bit of summertime, so everybody's out doing the things and having fun, sitting on the water, whatever it may be. But typically, we'll start to see people come back in as the summer starts to come to a close. People start getting ready for school. School starts in 20 days, 22 days, something like that. I mean, it's kind of getting wild. But the major thing that also sticks out why I'm anticipating the market's probably going to go down is we haven't seen the 30-year Treasury bond at 5% since 2007. We're going to go to the weekly on this. So the last time we were at these highs was way back here in '07. '07 was the highest we've ever been. Interest rates have went down. They've been in a low interest rate environment basically ever since. And now we're crawling our way back up. And the reason is because, well, less demand for the bonds leads to higher yields, right? So there's less demand right now, which not the end of the world, but I mean, it just showcases to us that things are hard right now. And the markets will cycle, and we will see another bull market. We're going to see money come into the market. We're going to see things fly. People are going to make a lot of money again, but we're not quite there yet. We have to see that 30-year Treasury start to fall before we start to see markets rise. Does that make sense? So until we see some major movement here, which could very well happen. I mean, there's been talks. There's been talks about Trump stepping in to help with the Japanese yen and be able to help structure that market a little bit better because they've been raising interest rates significantly this year and continue to see high inflation, continue seeing problems in their economy. So more than likely, there's going to be a point where a country like the United States is going to step in and basically prop up that economy. Will it happen? I don't really know. The conversation's been had. It's been on a few headlines, but we'll kind of see. So I mean, right now, you guys markets don't seem very hot. They don't feel like they're going to take off. I mean, they very well could. I don't know. I mean, I've jumped into this for the first time after 3 weeks, but right now, what the market's telling me based off the charts this morning is we're more than likely going to see some downward action as we move into August and move into October. October, we might find it closer to a bottom and then start to move up from there. So that's what I got for you guys today. We're just going to keep it smooth, keep it light. Thanks for watching. I hope you have a beautiful day, and we'll see you next time.